Hey y'all, it's Dylan, and if you don't understand supply and demand, you will never understand the market. Here's the easiest breakdown you will ever see. So let's get into it, man. So, what is supply and demand trading? Supply and demand trading is a price action strategy that focuses on identifying areas on a chart where buying or selling is strong enough to move price significantly. A demand zone is an area where buyers enter the market, causing the price to rise. Similar to support, I'm gonna get into that in another video. Support and resistance versus supply and demand. A supply zone is an area where sellers enter the market, causing the price to fall, similar to resistance. So, in essence, what traders look for is imbalances in between buyers and sellers to predict future price movements. Price moves because of imbalances between supply and demand. When demand is greater than supply, price goes up. When supply is greater than demand, price goes down. These zones form when institutions like the bank's hedge funds have placed large orders. So the characteristics of a demand zone, what are they? It's found at the origin or the start of a strong move upwards. Price often leaves the zone with big bullish candles or wicks. When they're revisited, the zones, when they're revisited, price tends to bounce higher. What are the characteristics of supply zones? So they're found at the origin or start of a strong downward move. Price often leaves the zone with big bearish candles or wicks. When the zones are revisited, price tends to drop lower. So why do traders use supply and demand? Well, it creates higher probability setup with clear risk to reward. It's a clear picture. It's focused on raw price action. You don't need any heavy indicators like anything. The MACD, RSI, trend line indicators. You don't need anything. It's just raw price action, raw candles. And it works across all time frames, like scalping, swing trading, investing. It works all across. It's on the 1 minute time frame, 5 minute time frame, 15-minute time frame, etc. And you could use it on any instrument that you trade. It's real versatile. It's a versatile strategy. That's why I love it. And also, it helps identify where smart money, the institutions, is likely to enter or exit. So it's just a huge, clear picture. So let me get into the examples. This is an example of a demand zone. Y'all see how right here, price just burst up? It just as if it just happened out of nowhere. And what happened? It came back to the zone. And when it came back, buyers were found here. We got a big wick, a rejection of the zone, and price moved up. This is the perfect example of a demand zone. Here's another example. Y'all see this? This is the start. When price rallied up and came back, it rejected because there's orders being filled right here. The big money institutions, they're sitting right here in this area. So it's a big indecision candle that came out of the zone, but it went up. It eventually pushed up. And when it came back to retest, it did the same thing again. Those are the demand examples. Here are supply examples. So here's one supply example. Y'all see when price just tanked, this is the start of the move. It tanked and it came all the way back in the zone. And when it tapped the zone, we got a major rejection off of it and price went down. Here's another example of a supply zone. So y'all see this? This is the start of the move. So we got this big push down, 3 candles, and then we got some chop right here. And then what we do when we return? The orders got filled, the big money. This is where they started to push the market. So the big money got in. I mean, they got orders sitting right here, which got filled, and they rejected. So what did y'all guys learn, man? These are some key takeaways. So when you think supply, think sellers. So supply equals sellers dominant. Price is going down. When you think demand equals buyers. Buying is going up. This trading strategy is built on imbalances where prices just stalling out and then we get a big burst in either direction. It's balancing, the market is agreeing on price and it just burst out. And the zones highlighted institutional activity. So those zones that you just seen that I just showed, that's where institutional buyers are. So this is a powerful method for traders who prefer price action over the indicators and all the other things that people typically use. If you love this video, man, and made it to the end, please like and subscribe to the YouTube channel. My mission is to help y'all. I got years in the game. You see what I'm saying? Like I know what I'm doing. Just like and subscribe, man. This is my first video. I'll see you guys later.